Anthony Grasso here, bringing you financial news that you can use. In this series of videos, I'm going to look at recession-proof stocks that you may want to consider in your portfolio right now. In this particular video, I'm going to do a stock analysis on Dollar Tree. Is this small discount chain store worth investing in right now, you might ask? Well, let's find out together. What I'm going to do is go over a summary of the company, its product offerings, recent headline news, analyst projections, financials, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull. It's an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. So Dollar Tree is an operator of a variety of discount stores. The company's business segments include Dollar Tree and Family Dollar. Now, Dollar Tree segment is the operator of discount variety stores offering merchandise predominantly at a fixed price. Its stores are operated under a brand name, Dollar Tree and Dollar Tree Canada. It operates 15 distribution centers in the United States and 2 in Canada. Now, the Family Dollar segment operates general merchandise retail discount stores, providing customers with a selection of merchandise and convenient neighborhood stores. The Family Dollar segment consists of its store operations under the Family Dollar brand in 11 distribution centers. Now, Family Dollar store segment consists of consumable merchandise, hardware and automotive supplies, diapers, batteries, pet food and supplies, seasonal and electronics, merchandise, and apparel and accessories merchandise. It also owns trademarks including Family Dollar and Family Dollar stores. So let's go ahead and look at some of the news that have hit Family Dollar and Dollar Tree and Family Dollar. So regulators have found that it was hit with a $1.2 million OSHA fine for violations at 2 of the Ohio stores. Regulators found blocked exits, unstable stacks of goods, cluttered working areas, and inaccessible electrical equipment and fire extinguishers. Now, Doug Parker, which is the Assistant Secretary of Labor for Occupational Safety and Health, said Family Dollar and Dollar Tree stores have a long and disturbing history of putting profits above employee safety. Now that's a negative note there, but there is some good news that has just happened for Dollar Tree and Family Dollar. Now, Dollar Tree has tapped into some new leadership to turn around the Family Dollar business. Now, the new leadership has come in, including John Flanagan and Larry Gatta, both previously at Dollar General, as head of supply chain and merchandising, respectively. I think this was a smart move for Dollar Tree. I think they're going to actually be helping to turn around a Dollar Tree into the future. So now let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading at $165.37 a share with a market capitalization of about $37.1 billion. Now, the company is projected to have $28.12 billion of revenues for 2022 with earnings of around $1.82 billion. Now, the revenues are projected to increase over the next few years to around $31.27 billion by the end of 2024 with earnings of around $2.2 billion respectively. Now, earnings are forecasted to grow around 8.79% per year, and just in the past year alone, earnings grew 1.5% over the past year. So let's go ahead and look at some of the analysis for this company. Let's look at the valuation for one. Because Dollar Tree is in the multi-line retail industry and has positive earnings, the price to earnings growth, PEG, and the price to earnings, PE, and the price to book ratios are the most appropriate valuation measures. Now, the price to sales ratio is less instructive than the PEG or PE since the company has positive earnings. Therefore, Dollar Tree seems expensive right now with a PEG value of 1.53 times above the industry median PEG of 1.13 times. Although their price to earnings ratio is 25.36 times, that is among the highest in the industry. Now, the industry peer average right now for price to earnings is 24.4 times. So based on the valuation alone, it's a little expensive. Some would argue a fair multiple would be about 18 to 20 times. But when looking at future cash flows using the discounted cash flow model, the stock is definitely way undervalued. Now, looking ahead at the profitability analysis, Dollar Tree has typical profitability characteristics for a company in the multi-line retail industry. While it does a better job than median job converting revenues to profits on a net margin basis, its operating margin is on par with the industry norm. Now, looking at the growth rates analysis, it doesn't have any dividends, but looking at the growth, now earnings growth at Dollar Tree outpaced revenue growth over the trailing 12 months. Now, this is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the industry. Now, looking at the financial strength analysis for this company, it has a total debt to capital ratio of 29.32 times, which is in line with the multi-line retail industry's norm, given that the company's operating profits are 21.51 times greater than the interest payments. There should be little difficulty in repaying the debt. So what do the analysts say specifically regarding Dollar Tree? Now, they have it as a moderate buy right now. The average target price for Dollar Tree over the next 12 months is $172.14 a share, with a high estimate of $194 and a low estimate of $123. So going over some of the analyst reports that I found, and there's many out there, the street quant ratings rate Dollar Tree as a buy. Now, this is driven by the multitude of strengths which they believe should have a greater impact than any weaknesses and should give investors better performance opportunity than most stocks that they cover. Now, the company's strengths can be seen in multiple areas, such as revenue growth, expanding profit margins, solid stock price performance, growth in earnings per share, and increase in net income. Now, they feel the strengths outweigh the fact that the company has had a generally high debt management risk by most of the measures that they evaluated. Now, looking at the Ford Equity Research Report, now they have a strong buy recommendation on Dollar Tree. That's a result of their systematic analysis of the three basic characteristics that they look at. They look at earnings strength, relative valuation, and recent stock price movement. Now, the company has enjoyed a very positive trend in earnings per share over the past 5 quarters, and while recent estimates for the company have been raised by analysts, the Dollar Tree has posted a better than expected results. Now, based on the operating margins, the operating earnings yield, the company is about fairly valued when compared to all the companies that they cover. Share price changes over the past year indicates that Dollar Tree will perform very well over the near term. And finally, when we're looking at the CFRA report, their opinion is a buy. They think Dollar Tree shares are undervalued following its decision to move to a $1.25 price point within its 8,000 US stores. Not only should this strategy help offset inflationary pressures, but it should help Dollar Tree expand product assortment, ultimately driving better value for the consumer. They also expect that store traffic trends to benefit from high inflation in the U.S., noting Americans are becoming increasingly price conscious with inflation currently at a 40-year high right now. And they also said with 35% plus earnings per share growth is expected this year and another 15% next year. They think that the shares are undervalued, trading at just 19 times forward earnings. So am I a buy, hold, or sell recommendation on Dollar Tree? Let me bring it back over here. Here are my thoughts. Now, dollar stores in general could work as inflation plays for investors like us out there as shoppers try to stretch their budgets. Now, discounters offer several advantages during periods of high inflation. These retailers could have the pricing power to pass on higher costs to consumers. They're able to attract higher income shoppers who are trying to stretch their dollar and trade down right now. As we try to best position our portfolios right now, we have to think which companies offer the consumers value, who has the growth opportunities, and which companies has the defensive characteristics, all of which really stand out for the dollar stores like Dollar Tree. Now, when we focus on value, Dollar Tree has beat expectations on earnings, revenues, and same-store sales. Dollar Tree has raised its outlooks for the coming year. Now, dollar stores during recession risk are very attractive picks. Now, Dollar Tree's convenient locations help boost sales, as well as their well over 16,000 locations with their small size that puts them within reach of many shoppers out there. Now, Dollar Tree has finished raising its price point to $1.25 in its stores in February, a decision that gives the discounter more flexibility to mix up its assortment of products and goods. It also has a $3 and $5 price points that it's rolling out in many stores. Now, in general, dollar stores are traditionally regarded as a steady business in good times and bad times. But Dollar Tree is looking to turn around the business because Dollar Tree has struggled in the past because of the underperformance of its Family Dollar business. Now, but it has brought in new leadership to help supply chain and merchandising to help turn around Family Dollar, and I believe they're going to be able to be successful with that. I would keep my eye on Walmart though right now to see if they're going to continue to play nice or get more promotional to take market share away, but I'm not too worried about Walmart at the moment. When you're forced to buy what you need rather than what you want, dollar stores shine right now. So based on all of that, I'm a buy recommendation on Dollar Tree, and I put a 12-month price target of around $175 to $180 a share. Now, the biggest downside risk to my recommendation is the ongoing issues at Family Dollar, of course. They have put the leadership team in place to change all of that, so not too worried about that. And the other downside risk is inflationary pressures related to merchandise cost, freight, and labor, weak price elasticities from decision to raise prices above $1, which I'm not too worried about. Waning pandemic-related relief, stimulus checks, unemployment benefits, child tax credits, so on and so forth. Competition from other discounters and big box retailers like Walmart, Target, Aldi, and Dollar General. But I would also look at Dollar General specifically in addition to Dollar Tree for this category in specific. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell if you'd like to hear daily stock and cryptocurrency reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.